Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hi, audience. Welcome to Achieve Wealth podcast, a podcast where we focus on value-add commercial real estate investing. Today, we have Devin Elder from San Antonio to be as part of our guest today. Devin Elder is principal of DJE Texas Management Group. Since 2012, DJE has completed more than 200 plus investment transactions and has an ownership stake in more than 1,000 units, doors in multifamily in Central Texas. Devin, why not you tell about yourself, whatever I've missed out?
Hey, James, thanks for having me on. Appreciate it. There's a lot of detail in there, a lot of ups and downs and learning and all kind of things that go into these deals. As I started out in the single family world, same as you. And I never really left it. I've been doing single family since 2012. And then a few years ago was able to find a really great partner, a younger guy with a construction background. And I was getting busier in multifamily. So I said, rather than just kill off this revenue stream in the single family, would just bring on a partner, have him run it. And I will, I'm obviously my company too. And we still run it. So we still do a lot of single family, but me personally, I'm focused about 90% of my time on the multifamily business is what I do today.
Good. And you are native San Antonio, right? You lived there for forever since you're born?
Yeah, more or less. There's some times throughout my life when I didn't live here for a few years here and there, but yeah, for the most part, I grew up here. I graduated from University of Texas in San Antonio, went to high school here, the whole thing. And now I'm trying to buy as much of it as I can. And it's really funny because there's areas in San Antonio, I'm 40 years old. So I'm going, man, for 40 years, this area's been not good. And now all of a sudden, the hipsters want to live there or whatever. So we're like buying these houses and selling these houses in areas that are coming up for the first time in my lifetime. It's really interesting to see. And you know how much it's changing here. You got a Frost Tower downtown. You've got the Pearl, massive development there. You've got cranes in the sky and in downtown San Antonio for the first time in a long time. It's good to see.
Yeah, I remember my time when I started in real estate, right? So I had someone, I'm from Austin, right? San Antonio is like 1 to 1.5 hour drive. If you're northeast, 1.5 hour drive. And it's crazy on the price difference between Austin and San Antonio and the demographic difference. And I remember someone telling me, because I was looking at deals in Austin, and at that time, deals in Austin was like, when I look at single family homes, it was like 100,000, 120, in downtown, right? It's easy, right? And at that time, I had limited amount of money. When I started, I only had like 50,000. I thought, okay, maybe I can buy 2 deals here, right? But I want to grow very quickly. And when I talked to someone, he said, why not buy in San Antonio? I said, I'm not driving there for 1.5 hours. Then at that time, it hit me like a brick because, hey, I'm just being lazy, not driving there to buy more deals, right?
Right.
If you want success in life, you have to take that, drive 1.5 hours, nothing, right? So, and then I realized, then I looked at the prices in San Antonio. I realized the amount of equity that I can generate by buying in San Antonio. I can buy like 6 to 8 houses there compared to Austin.
Incredible.
Which is like 2 houses, just because it's a lot more cash flowing deals in San Antonio. There's not much of appreciation play, even though now things have changed. But it's just a lot of houses at that point of time. It's much larger cities, more cash flows, a lot of diversity there. And that's why I start driving to San Antonio almost every day. Not every day. I think a lot of times in the week, after work, we used to drive to go and see houses and start buying houses there. So what do you like about San Antonio? You have been there, and what do you see in San Antonio that?
Yeah. I like it. I've got a family, and it's a great city to raise a family in, and there's lots of family activities. From a real estate investment perspective, historically we've been fairly slow and steady, right? So we didn't really see a big upset in values in 2008. It just kind of went flat for a little while. But historically, we haven't seen a tremendous amount of appreciation either. Just kind of slow and steady is the name of the game. That's heating up a bit in the last few years, and it's changed, but still relative to markets like Dallas, Austin, San Antonio is still relatively quiet, relatively lower cost on some of these, assets, especially like the multifamily stuff. So that's good. I like this market, investing here for just kind of the long haul, just kind of slow and steady increase. We're also seeing we've got some good fundamentals in terms of employment, right? We're not wholly dependent on the price of oil or one sector. We've got a lot of military here. We've got a lot of medical here for sure. San Antonio is trying to get our tech sector ramped up, and there's some local entrepreneurs and some of the guys that were part of Rackspace and left Rackspace are really doing a great job building, technology companies and software companies here. It's very early stages, but I think in the future that does real well for San Antonio when we can start to grow some more technology companies here. So all of that is, I think, trending well for San Antonio. And then just looking at the net positive migration numbers, right? How many people are moving to San Antonio? We're still kind of a workforce housing town. Just because people are moving here doesn't necessarily mean that they're the super high wage earners or whatever. But it's a good metric that you look at when a lot more folks are moving here than leaving. And in the space we play in, workforce housing, B and C, multifamily, those folks are going to continue to need housing. And there's it's really impossible to build a 1980 200 unit apartment complex. The only stuff that gets built is brand new. So there's kind of a supply constraint there, which I think plays well with the business model.
Got it. So yeah, Austin to San Antonio corridor, it's a huge growth corridor from what I see. Austin with the high tech and high cost of living, a lot of people are going to in between Austin, Kyle, Buda, San Marcos, New Braunfels, and San Antonio, right? So it's just expanding, in a huge way, right? And if you look at San Antonio, I think that's the closest city to the border, right? To Mexico, right? Closest biggest city, if I'm not mistaken. And the I-35 is considered the NAFTA highway, right? Which is a good, because there's a lot of business going between the U.S. and Mexico. So, what are you focusing on right now in real estate? Can you tell me your real estate focus now, and we can go into the details?
Yeah, so I mentioned I've got the single family business, which is very active. We do flips and things like that. We're building some houses. Different things like that going on. But really, as I mentioned, my focus is multifamily. And really it's, we've got a really good team for all the parts of the business that, that happen, underwriting and acquisitions and asset management and those kinds of things. Me personally, I'm really focused on, the equity side and putting together equity for the projects that we buy, and then the acquisition side. So really going out there and looking at every deal, underwriting every deal, touring every deal. We're focused exclusively on San Antonio. I've looked at some stuff. I own a property in Seguin now, which is about 45 minutes outside of San Antonio. We look at properties in New Braunfels or San Marcos. I don't get up to Austin just because I haven't seen how stuff is going to pencil, on the acquisition side up there. But also, we're really busy in San Antonio. Like, we're looking at I'm looking at as much stuff right now as I'm happy to be looking at and touring and underwriting just by focusing in this market. So really, we're looking for stuff that's over 100 units. 150 plus units, that type of thing that we can buy and do some kind of capital improvements, $4,000, $5,000, $6,000, $7,000 a door of capital improvements. And those kind of run the gamut from just deferred maintenance to sprucing up the outside of a property. Maybe there's a rebrand, or maybe there's kind of a management or operations issue we can go in and fix. Something that we can go in and create some kind of value. Because at the end of the day, it's all investor return driven. So when we look at deals, really, like, the one thing I look at in our underwriting is what's the equity multiple over our hold period? Are we going to be able to double people's money in 5 years? If not, then maybe that's something that we pass on. And then if you do that, if you look at the equity multiple of around 2, then your IRR is typically going to be high teens, and your cash on cash probably going to be somewhere in the 7 to 10 range over the hold period. So the cash on cash numbers kind of work themselves out, and the IRR, we're really just looking to see, is there a way to add some value, cut expenses, improve our rental income by making some improvements and so forth, and just hold on to these things. We like a lot of sponsors underwrite typically a 5-year hold and just go in and execute the improvements over the first year or 18 months, and then just kind of hang on to the properties and try and grow that portfolio.
Awesome. So what's your favorite value add strategy? I mean, I think you have done lot of deep value add deals, right? Where you guys, why not you describe some of the few deep value add deals that you guys have done? Then we can go into a bit more details into that.
Yeah. There's a property right now that we're actually just kind of coming out of our cycle on, a pretty heavy lift, and there was a lot of Section 8 in that property. And then there was also this, there were some weird units where they were calling them 3 bedrooms and 4 bedrooms, but it was really 2 1-bedrooms on top of each other. And they'd put a spiral staircase in between. And so that was kind of a weird deal where the property was originally built as a much larger property. So we went and changed it back to the larger property, basically adding units and then changing it from an all bills paid property to none of the bills being paid by the property. And so that was a pretty drastic repositioning of that property where, that's tough to do. And there's a lot of moving parts. It's not like just going in and making some little improvements. It was like completely recharacterizing this property as a market property versus like a lot of Section 8 that was in there. So that part was definitely a challenge. Fortunately, we budgeted well for it up front. A property like that, you want to leave a nice fat contingency number in the budget because you just, you can go through and get all your inspections done. But, we know in real estate, especially old stuff built in the 70s, whatever it is, that there's just going to be stuff that comes up there. So you want to be well capitalized. Fortunately, I've been in construction for a lot of years on these single family houses. I've seen absolutely everything you can imagine, where we've spent $100,000 renovating one house. So it's like we've seen and done everything. And so none of this stuff really surprises me. It's just that on the apartments, you got to watch out for things like, $100,000 plumbing bill that could come up if it's a really old property, or different things where the rehab numbers just get bigger. But yeah, as far as value add strategies, I mean, on that particular property, there was a lot to do. The stuff we're looking at seems like lately more now, it's really just about kind of doing some interior updates where you're putting in kind of the classic vinyl plank and two-tone paint and new fixtures, and then doing what you have to the exterior. Sometimes that's a rebrand. My favorite overall, my favorite exterior thing is the solar screens, right? Because it might be like $10,000 for a whole property, and it like completely changes the look of the property. So I always want to put those on if a property doesn't already have them, right?
Yeah, that's interesting. I mean, I love the solar screen. It's just I've trying to put it in my properties, but haven't got a chance yet. But I know it looks, the amount of money you spend, it really gives you the exterior look of a very nice, very clean look, right? Very sharp look of the property, right? So
yeah, and then it hides the blinds, and it hides all kind. It covers a multitude of sins. So I like doing that where possible. It has a nice impact, and I think like aesthetically, it has one of the biggest bang for the buck. If you try to go paint a whole building, it's going to be like ridiculously expensive, right? I don't know how much you've done that, but it's tough sometimes.
Correct. So let's go back to that property where you have to do a configuration change, right? Because that's a major change, right? And changing from all bills paid to bills paid, that's another major change.
Yep.
And are you eliminating Section 8 people and getting into a conventional market as well?
Yeah, that's right.
Okay, that's another big change. So you're doing a lot of changes in that deal. So how long do you expect to turn around to stabilization?
Well, it took about a year to get it stabilized.
Okay.
And we're there now. So that's, changing the bills from all bills paid to nothing. And it was interesting because we didn't really factor in or underwrite like a big, huge rent bump. Usually, sometimes you say, hey, we want to do $4,000 on the inside and that's going to be $100 rent premium. And so I think, what is that, like $1,200 a year divided by 4,000, you're getting a 30% ROI on your interior upgrade. If you spend 4,000 and you get $100 rent bump, that's kind of like a typical underwriting, ROI exercise that you would do. On this property, we didn't see it on really the rent bumps. In fact, the rents didn't really change a whole lot, but we're taking about something like $200,000 of utility expense off. So it kind of almost doesn't matter whether you're raising rents or lowering expenses. It all drops to the NOI. And it's the same thing, right?
Correct. So how did you come up with that plan about, okay, so you go into that building, let's say the broker takes you to the unit, and how did you identify the opportunity?
Yeah, so the opportunity on the utilities was just kind of at the first pass of the underwriting, saying, hey, based on the location of the property and what we think we can spend and improve it and rebrand it, that we can make this a market property. And then the opportunity to convert some units was actually on the first tour, after like we'd done some underwriting and looked at it. And then we started seeing all these funky staircases. And first of all, they just look dangerous, right? I mean, you don't see spiral staircases in properties, and probably for a reason. And so once we figured out the original layout of the property and said, you know what, we're just going to take these out, add some units. It's going to be safer. We're going to change the unit mix because there'll be more one bedrooms on the property, but we're okay with that. And then kind of underwrote that and said, hey, we got a pretty low basis now. If we're looking at it as a 130 unit property and we're picking it up at this price, then our basis is pretty low. We feel pretty good about going in and making those changes. But the conversion opportunity we didn't discover till we actually did some walkthroughs.
So what about the parking lots and parking spots? Because that can be a problem with the city, right? Because usually they go by unit mix versus parking.
Yeah, for sure. Luckily, the parking ratio was really very good to begin with, because the property had originally been built as that higher unit count. So it wasn't like we were building new units on dirt and we were running into parking constraints. We're actually just kind of returning the property to its original setup. And so the parking ratio still is pretty good, even with all those units.
Okay. So the guy who you bought it from, he may be the one who have converted by making like, two one bedrooms into, 2x2s, I guess. Right. He may have done that. Right.
Yeah.
So you're basically converting it back.
They had it for 5 or 6 years. I don't think it was them. It was some previous owner. Who knows how many times it's changed hands. I guess I could go look it all up, but it definitely wasn't the owner we bought from. Who knows how long it had been, in that state.
Okay. So that's very interesting. So what about on the interior side? Is there any unique value add strategy that you really like to do that you think is the biggest bang for the buck?
Yeah. You start to tour all these apartment units and see everything. And it's like, man, do they start to all look the same, right? You got vinyl plank, two-tone paint, gray walls, updated fixtures, and it's all kind of the same thing, resurfacing countertops. So that's all kind of the same. One of my favorite things is those little metal pull bars. You can get them for like $1 on Amazon. You order them 1,000 at a time or whatever. And it's sometimes we'll reface cabinets, but usually we'll just paint cabinets. And instead of the little knob pulls, we'll do the pull bars.
Oh, okay.
And cost slightly more, but in the scheme of things, we're talking about $1 per bar instead of maybe a quarter per knob. And it just gives it a nice look. I really like that look, and it's really inexpensive. Another thing that we're doing in a property that we just bought is this stone backsplash. And it's basically just goes right on. So it's 3D, three-dimensional. It looks really good. It looks expensive, but it actually doesn't really cost us that much. And we do it all in-house. We just bought, we use third-party property management, but the property just bought the Stonecutter, and they can just go in there and cut it and put it right on. And it looks really sharp. And that's a nice improvement versus like actually going in and putting in subway tile or something that's going to be a lot more costly.
Interesting. I've seen like where it comes in pieces, but are you talking about the whole thing coming together? And then
it still comes in the 12 by 12 pieces, but it basically just sticks right on. So all they have to do is make the cuts.
Got it. Interesting. I need to check that out.
And I've seen like the mosaic tile stick on stuff, but I don't think that stuff's going to hold up real well. This is more like stone, and it goes right on.
What do you remember? What's the name of it?
I don't. I could send it to you, but I don't remember off the top of my head.
Yeah. And how much does that cost to do it?
I think it's costing us like $150 to put in.
Yeah, that's really cheap, right? Just put it in and 150. A lot of people like backsplashes, right? And that's very interesting that we can put that in. And I know about the pool bar of the cabinet. That looks really nice as well. Just gives you.
Yeah, it's a nice, easy upgrade. Absolutely.
Yeah, got it. So, is there any deal that you thought was not a good deal and you walked away, and later you found out it's a good deal? And can you describe what you could have done to, catch that opportunity?
I feel that way all the time. I underwrite a deal and then I maybe offer on it and the offer wasn't high enough and we lose the deal. And then I see like a friend of mine buy it or something. And I'm going, well, so they saw something in it, I mean, I couldn't get it to work, but what did they see in it? Or like there was another deal that I was like, way low on our offer price. I was like $2 million low on our offer price, which I was like, that's as high as I can get it to underwrite to. And then, I see it come out on Crowd Street from some firm in California bought it. And they were like super aggressive on their numbers. And I'm going, man, this is a big firm. They have 5,000 units. I have to assume they know what they're doing. They're being like really aggressive. And so there's not a deal that I can point to specifically and say, that was the one that got away, because if we lose a deal, I just move on. I mean, we're looking at so many deals and touring so many deals that I don't really worry about it if we lose a deal. I mean, that's just the name of the game. You're going to lose. I mean, my philosophy is you're going to lose most of the deals, and that's okay. That's just the game. But I do see stuff. I do see stuff that we look at, and then somebody else buys it, and sometimes I scratch my head and I wonder how they're making the numbers work, right? So a lot of that, I think, unfortunately, is that we've just been in the kind of this market where stuff's been appreciating, and it's just. I mean, we see that a lot on the single family. Like we buy a project and then we rehab it, and maybe we go over on the rehab budget, but in the 6 months it took us to buy to sell, like there's been appreciation, and it's like, well, that's really good when it's working for you, but it's not always going to go in that direction, right? So I think we've seen a lot of that in multifamily, and that, it's just, you have to be very cautious right now in this kind of stage of how long we've seen asset prices increasing, and just be just not assume that that's going to kind of continue forever, right?
Yeah. So let's go to a bit more personal side. What do you think is your like top 3 things that you have inside you that is your secret sauce in becoming success in the business?
Yeah, I think early on it was the absolute decision to make this a success. And by decision, you may have heard the root word of decide is to cut off, right? And so it means to cut off any other alternatives. And I think looking back, it's easy to just say, oh yeah, I just made that decision. But it's very extremely difficult in the beginning, getting started with really really any money to get started or any knowledge or experience. It's not like my family's done this or I learned this from, somebody that was close to me. It was really just going out and figuring it out. So making the decision early on that this was going to be what I did and it was going to be a success, and not being a dabbler, right? A lot of people want to kind of just try things out. And I don't think that's a recipe for success in anything. Like, it's more like a marriage, right? Like, you commit to it forever. And so I committed to this early on and put everything I had into it in terms of my resources and my money and everything. And it had to work, right? And when it has to work, I think you find a way to make it work. So that's the first one. And kind of the most important thing was just being very decisive about this being what I was going to.
When did you decide that? Was it when you were at school or when you're doing your W-2 job?
Yeah, while I was doing my W-2 job, I did my first couple of houses, and I decided, cause I really want to get out of my W-2 job, and I didn't even know that real estate was going to be it. I just didn't want to work for somebody forever.
Is there, do you have a triggering point that at that point where you decide I'm going to do this full time?
Yeah, I was fortunate in my first career. I worked at a really fantastic company and had a great couple of years. And then after a while, I started to get a little bit restless, and I thought maybe there's better opportunities. And so I started kind of moving to different companies, trying to find the next promotion or whatever. And then I just kind of discovered after a few years of doing that it was the same everywhere I went, every company. It was just the same stuff I had to deal with. And somewhere along the lines, I just really kind of discovered that I wasn't going to be happy unless I was an entrepreneur, unless I was calling my own shots. So that was really the catalyst for me to say, I have to get out of here. My older brother's an entrepreneur. He has been his whole life. And I always appreciated like the level of freedom he had, even if other things were crazy, right? Because an entrepreneur, there's definitely some crazy stuff.
Yeah,
like
absolutely.
you have to be on board for that. But I'm definitely on board for it. I think I'm just cut out to be an entrepreneur. And now that I am an entrepreneur, I'm much happier. So it was finding that vehicle. I didn't know that it was going to be real estate, but I knew first I wanted to be an entrepreneur, and then I figured out that real estate was going to be it.
Any other thing that you think is your secret sauce?
I think finding people that are really good at things and giving them tasks, because as an entrepreneur, you wear so many hats. It's really important for me to, once I figure out one little process, that I give it to somebody else, right? Whether that's like, editing my podcast or doing my underwriting. It's like, I can do all these things, but as a CEO of a company, I shouldn't be doing any of those. I should only be doing a handful of things. And I think it's very tempting for people to, spend hours, let's say, underwriting a deal or pulling apart a financial statement, on a T12 of a property. It's like, well, you can find really good people to do that, probably better than you. And then you could focus your time on other things. So I'm very big on dollar per hour activity. And I keep spreadsheets and everything to track all this stuff of what are the highest dollar per hour activity things that I can do. And I need to find somebody else to handle all the other activities.
Awesome. Is there any proud moment in your life where you think you are really proud of in real estate ventures?
Yeah. I mean, quitting my day job was a big one. I mean, I was very, very proud of that.
At the point of quitting or after a few years after quitting?
No, definitely just getting to the point where I had enough cash flow and everything to be able to quit my job. That was very, very big step. It's, I'm very proud of some of the renovation work we've done. And this is like single family and multifamily, but there's hundreds of properties in San Antonio that are like nice properties now because of the work we did, and so we're not buying nice looking properties most of the time. We're buying properties and spending $1 million on making them nicer. And so that's pretty cool, to be able to do that. And that's having an impact, even a small impact on the city that I live in. And I love that. And then now, as I've been in business for a while, giving other people some opportunities, whether that's some of the people that work in my business, giving them an opportunity through the company, and giving investors an opportunity that, like, so many of my investors, you talk to, they didn't know they could put money into a deal like this and make this great return and not have to do any work. And it's like, people just don't even know that it's an option, And so to be able to have people participate in that is really very rewarding. So I'm very proud of like the renovation work that we've done. And, we've raised and returned millions of dollars of capital at this point. And that feels very good to be like a good steward of other people's money. I'm very, very proud of that piece, probably more than anything.
Absolutely. I think it's very fulfilling, right? Taking distressed property and changing it. I remember when we did a lot of single family and now we're doing multifamily, but we remember one of the flips that we did, we bought like 42,000, if I remember correctly. And we sold it for 140, but we also put like 40 to 50,000 into it. But that was a complete change in the house. And until now, I can remember that house and how it was and how when we left it. And, even when you're old, I'm sure I can drive by that place and say that, we flipped that house to look as nice as right now, right? So
Yeah.
it's a very fulfilling,
It is.
venture, right? So that's
Yeah,
awesome.
it is. I was driving around the other day, and I was in this part of town called Beacon Hill, which is like this big up and coming area of San Antonio. It's kind of near a little bit northwest of downtown. And I don't remember what I was doing over there. I'd met somebody for lunch or something, but I said, I'm going to drive down this street where I flipped a house. And then I just drove by it. It's like 2 years later. Oh, the house looks good. And I said, you know what? I flipped another one on the other street. And so I drove like 4 or 5 houses in that area that I, flipped at some point over the last couple of years. I said, man, we did a lot of houses. You spent a lot of time and money and energy over here, and it's cool. Yeah, it's cool.
Yeah, it just gives you a lot of happiness inside you, right? So that's really
yeah. Yep.
So when you look at your daily habits, right? What are the habits that you think that you have mastered or want to master that you think makes you a very successful entrepreneur?
Yeah, it's definitely systems, right? So I'm very naturally inclinated towards putting together systems. So I like to figure out what a process is and cut it down, anything, whether it's the acquisition process on a multifamily or any part of the business, right? I like to figure it out, boil it down into stages, and then within each stage, boil down the steps. And then I like to really document the steps and then give them to other people. And that's really the key for me is I take a process, really spend time breaking it apart, and then figure out every single little minute step. And I have a kind of I have like a standard for creating training. And that is, I want to be able to take somebody, walking down the street and pull them into the office. And if they can read and write, they'll be able to do the task the way that I'm training them, right? So very simple. And I think about McDonald's like as a good example. Not that the food is anything great, but the systems are just tremendous, right? Teenagers run McDonald's, right? It's this tremendously successful enterprise, but the systems are so important. So I'm a big systems guy. And that's kind of the thing that I'm always striving to do is anytime I'm doing something, I go, can I systematize this and automate this and, give this to somebody else. And so that's something I'm focused on all the time. Now there's some things you can't, right? So like broker relationships, right? Face-to-face time, things like that. Like there's no automating those things, and that's okay. But I want to automate and systematize everything else so that I spend my very short time and energy on like the most important things, right? So definitely just being disciplined about creating those systems, and it's difficult, right? But if you can be patient and create one little system or process and automate it, then that's, and you extrapolate that towards the future of how many times this little task that takes me 5 minutes, if it's off my plate for the next 1,000 days, how much time is that going to save me? So I'm always kind of just trying to fine tune that and really segment all the pieces of the business and get them into the hands of people that are the right fit for whatever task or job it is.
Yeah, that's something that I'm learning to try to do as well. My wife and I, we are such a control freak in our business. We want to make everything perfect, but it's basically impacting our life, right? Because now we have to try to do everything, right? So, and it's hard. As we grow big, right now we have like 30 over employees, and we hired people in the corporate side to help us, and
sure,
it is becoming much better now. But still, it just take time to really give up that particular work to someone else, and the way to do it is to create systems and process and manuals and all that, right? So we're actually learning on how to do that right now. So it is a very hard thing to do, especially when you grow from small to big, right? Unless you go into a big organization, you already know everything is set up, right? But now you're growing from doing it yourself, but now you have to delegate to someone else. And the understanding that the other person may not do as how well you can do, right? You have to live with it, I guess, right? So
yeah, it's a very tricky thing, and that's business, right? It's tricky because you are an equity owner, and you would do anything for the business, and then you've got somebody at $12 an hour that's just not going to, if you gave them half the company, They'd work as hard as you,
Correct.
but you're not giving them half the company. You can't give everybody, half of the company equity, right? That's not how it works. So you've got, the way I try to approach that is just creating really, really clear training. And one of my assistants is overseas, right? And it was very frustrating for me at first to work with her because I couldn't just say, here's a problem, just deal with it, right? She just didn't have that skill set to just fix it. But I started really creating very specific training on step by step by step by step. And not only did that make it easier for me to understand the process, but it made it easier for her to understand, and everybody was happier. And so we use something called that a friend of mine turned me on to. It's called Loom, Loom, and it's a browser extension for recording little videos. And so there's hundreds of videos in my organization for how to do everything, right? And so that allows me to kind of give it away. And if I assign a task to somebody or there's an automated task, it also includes a link to the training. So if they haven't done that task in a month, they get the task. But hey, there's also a link to a 3-minute training, which anybody could learn for that little task. And over time, instead of building a operations manual, which to sit down and write would be murder, right? It would just be awful to sit down and write the whole thing. I basically have built the operations manual one tiny task at a time and put it all in a spreadsheet that's divided by the system, right? Whether it's the accounting system or the marketing system, whatever it is. And so there's this whole library of content basically to how to do just about anything in the business. And so that's, it's been a hard process getting all that going. But, again, the freedom that comes from, it's still me dictating, this is exactly how I want this thing done. I set it up and then transfer it over to somebody else, one little task at a time, and just have transferred, hundreds of tasks over a few years of doing that. But yeah, it's difficult because nobody's going to do it as well as an owner. Correct. Or care as much as an owner, but there's just inherent limits there, right?
Yeah, absolutely. Absolutely. Let's go to one more topic. Let's say a newbie who want to walk your path, right? And be very successful in real estate and single family flips and now into multifamily. What are the, 3 to 5 advice that you would give them to get started in this hot market?
Yeah, it's definitely a hot market. I would say the number one thing is don't try to do this yourself, all yourself. There's too much, right? I mean, this is a business like any other business. And, you wouldn't try to just go open up a dry cleaner and say, hey, I have zero experience in this business, but I'm going to go open a dry cleaner and it's going to make money, right? There's too many things you don't know. There's too many things. So in multifamily, the underwriting, the broker relationships, raising capital, asset management, renovations, all those things are big topics, right? Where there's lots of variables and you're not just going to learn that stuff overnight. So I think somebody that wants to get in it, don't try to do it yourself, but you can partner with somebody that's done it and try to add value to them and be a part of a larger deal. That's kind of from where I sit now, what I wish I would have known kind of earlier on, that you can partner with somebody on a bigger deal in various ways, right? Maybe you've got to be able to add some kind of value to somebody that's further down the path. And if you can do that, then you can get on a larger deal, but you don't have all the responsibility on that project. And then you can get in that world and start learning through doing, because I think we really do learn through doing. And so that's kind of what I would recommend is don't assume you have to go out and do it all yourself, because I think that's just a recipe for frustration and potentially for disaster.
Awesome. Is there any funny stories from residents or tenants that you want to share with the audience?
Man, there are so many. Choose
the funniest one.
This is sad, but funny. So we're doing this project that was a crazy turnaround project, right? $15,000 a door renovation, right? Crazy. So there's something called a writ of possession. And so when you evict somebody, you go to court, and I was actually doing this on this property. I use third-party management now, so I don't go to court and evict people, but I've done that over the years, right? I've done all of it. So we evicted this guy for non-payment, and that's just how it goes. You don't pay, you can't stay. It's just not a charity we're running.
This is Texas.
Yeah, Texas, man.
It's landlord friendly.
Very landlord friendly.
Yeah.
So anyway, we evict this guy, He doesn't move out, whatever, and he's got stories. And so finally, we get to this thing called the Writ of Possession, where we file, and the Bexar County Sheriff comes out, and they stand outside for an hour. They don't touch anything, but they just stand there to make sure nothing like violent happens. And so we get the crew in, and we start moving this guy's stuff. So we open the door, and the guy who'd been like completely combative and everything, he opens the door. The sheriff is there. He's got a neck brace on, and he's like, "Oh man, you can't." He's wearing this neck brace, and I'm like, "I've never seen this guy in a neck brace, right?" So the guys move everything out on the lawn, and as soon as the sheriff leaves, he walks out on the steps, pulls the neck brace off, starts smoking a cigarette, right? And the neck brace is totally just a prop for sympathy. Who carries a neck brace around just to have it for sympathy, And I was like, oh man.
Oh my God.
So, there's a lot of stories like that. We're buying properties that a lot of times are beat up, but at the end of the day, you can't have any business's product for free. If you're living somewhere, you need to pay for it, and that's how it goes. So
yeah,
a lot of stuff like that for sure.
Interesting.
Yeah.
I think that's it, Devin. So why not you tell about yourself and how can the audience reach you, in case they want to reach you, and where to find you the best?
Yeah. So we got all kind of stuff online and content and stuff like that out there. The easiest way is through the main company website, which is DJETexas.com. So that's Delta Juliet Echo Texas.com. And if you hit the website, you'll see, links to everything else and a way to, you want to schedule a 15-minute call with me and learn about this stuff, or, you want to take the next step in this career for yourself, whatever it is, I'm happy to chat with people. So that'd be the best way, is the website.
Awesome. Thank you for joining us today, Devin. And for all the audience, thanks for joining us. You can always join us into our Facebook group. It's called Multifamily Investors Group. There's like almost 700 people right now within 1 month. So join us, and there's a lot of very meaningful discussion happening about multifamily, and we'll talk about other business issues as well over there. But join us over there, and thanks for joining today for the podcast.
Thanks, James.
Bye-bye.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.